Has the thought of being your own bank ever crossed your mind? No irksome fees, no long lineups, and no middlemen getting a share of your hard-earned cash? Welcome to the world of DeFi, or Decentralized Finance, the revolution that is upending the established financial sector. We're delving into the definition of DeFi, its operation, its significance, and its prospects today. You can't afford to miss this video, so stay tuned if you've ever desired to manage your own finances. What is DeFi? Alright, let's break it down. DeFi is short for Decentralized Finance, and it's exactly what it sounds like. Financial systems that run without traditional banks, brokers, or intermediaries. Instead, everything happens on the blockchain, a decentralized network of computers that verifies and records transactions securely. Think of it like this. Imagine you and a friend want to exchange money. Normally, you'd go through a bank, PayPal, or some other third party. But with DeFi, you can send money directly to each other, instantly, without any fees or restrictions. Sounds pretty cool, right? DeFi isn't just about transferring money though. We're talking lending, borrowing, earning interest, trading assets, and even insurance. All without a middleman. It's a financial Wild West. But instead of cowboys, we've got smart contracts doing all the work. How does DeFi work? At the heart of decentralized finance, DeFi, lies a game-changing innovation, smart contracts. These self-executing agreements are the building blocks of DeFi, and they live on the blockchain. Essentially, a smart contract is a set of conditions written in code that automatically executes transactions when those conditions are met. What makes these contracts so powerful is that they don't rely on any human intermediary or approval process. There's no room for shady business practices. It's all based on transparent, automated, and reliable code. To see the magic of DeFi in action, consider a simple example: borrowing money. In the traditional financial system, this would mean heading to a bank, filling out mountains of paperwork, and waiting for approval, often based on credit scores or other subjective factors. But with DeFi, borrowing is much simpler. Instead of dealing with tedious forms and credit checks, all you need to do is provide collateral, usually in the form of cryptocurrency, and a smart contract immediately grants you the loan. No credit score involved, no human intermediary deciding your fate, and no long wait times. It's all automated, fast, and efficient. When it comes to earning interest, DeFi takes it up a notch. In traditional savings accounts, interest rates are usually tiny, often less than 0.1%. With DeFi, however, the situation is entirely different. By lending your assets on decentralized platforms, you can earn significantly higher interest rates, often 5, 10%, or even more. These platforms cut out the middleman, the bank, and pass on a much larger portion of the returns to you. Your money works for you, not for the banks, creating a more rewarding financial ecosystem. Another core feature of DeFi is decentralized exchanges, DEXs, which allow users to trade cryptocurrencies without relying on centralized stock exchanges or brokers. Platforms like Uniswap, SushiSwap, and PancakeSwap let you swap tokens directly from your wallet, eliminating the need for third-party intermediaries. This reduces trading fees and risks associated with trusting centralized platforms. DEXs provide users more control, privacy, and security while giving them the freedom to trade anytime without restrictions or limitations. DeFi also introduces liquidity pools, where users can contribute their assets to pools that help facilitate efficient trading. These pools ensure there's always enough liquidity to support trades, and in return, those who contribute to the pools earn a share of the trading fees. This creates a mutually beneficial system where traders can swap assets seamlessly and liquidity providers are rewarded for their participation. It's a decentralized and democratized way to earn passive income from your assets. What makes DeFi so revolutionary is its decentralized nature. Instead of relying on traditional financial institutions that can impose fees, delays, and limitations, DeFi operates through smart contracts and decentralized networks that empower individuals. Users can access lending, borrowing, trading, and earning opportunities without the need for banks, brokers, or middlemen. This not only eliminates counterparty risks, but also opens up financial services to a global population that may not have access to traditional banking systems. Why is DeFi such a big deal? Now, you might be thinking, okay, this all sounds great, but why should I care? Well, let's talk about the real impact of DeFi. Financial freedom. Millions of people worldwide don't have access to banks. DeFi gives them a way to save, invest, and borrow without needing traditional banking systems. better returns. Banks give you crumbs when it comes to interest. DeFi platforms allow you to earn way more on your money through staking, lending, and liquidity pools. Transparency and security. Everything on DeFi is on the blockchain. That means no hidden fees, no sketchy bank policies, and no gatekeepers blocking your transactions. If you've ever had your funds frozen by a bank, you know how frustrating that can be. With DeFi, you're in control. 24/7 access. Unlike traditional finance, which closes at 5 p.m. on weekdays, seriously, why? DeFi never sleeps. You can access your money anytime, anywhere. No middlemen, no more banks, no more brokers, no more third parties eating into your profits. Just you and your money working for you. Innovation and growth. DeFi is evolving fast, bringing new financial products that were previously only available to wealthy investors. Now, anyone with an internet connection can participate in yield farming, synthetic assets, and algorithmic stablecoins. Popular DeFi platforms. So where does all of this magic happen? Let's look at some of the biggest DeFi platforms that are leading the revolution. Uniswap, a decentralized exchange where you can trade cryptocurrencies without a middleman. Aave, lending and borrowing platform where you can earn interest or take out loans without a bank. Compound, another lending platform that lets you earn interest by supplying liquidity. Curve Finance, a platform designed for stablecoin trading with ultra-low fees. MakerDAO, the brains behind DAI, a decentralized stablecoin that's pegged to the US dollar. Synthetics, a DeFi protocol that allows users to create and trade synthetic assets that mimic real-world assets like stocks and commodities. These platforms run on blockchains like Ethereum, Binance Smart Chain, and Solana, making them accessible and easy to use for anyone willing to dive in. The risks of DeFi. Alright, so DeFi sounds amazing, but let's be real, it's not all sunshine and rainbows. Like any new technology, there are risks involved. If there's a flaw in the code, hackers can exploit it and steal funds. It's happened before, and it will happen again. Cryptocurrencies can be extremely volatile. If the market crashes, your investments can take a hit. Scams and rug pulls. Since DeFi is still the Wild West, there are bad actors creating fake projects, scamming people out of their money, and disappearing overnight. Governments are still figuring out how to regulate DeFi. Depending on where you live, laws could change, impacting how you use these platforms. Impermanent loss. Providing liquidity can be risky if asset prices fluctuate significantly, leading to potential losses compared to simply holding the tokens. So, what's next for DeFi? Well, it's only getting started. Experts believe that DeFi could completely replace traditional finance within the next decade. More people are waking up to the power of decentralized banking, and as technology evolves, DeFi will become even safer, faster, and more accessible. We're already seeing banks and financial institutions trying to adopt blockchain technology because they know the future is decentralized. The question isn't if DeFi will take over, it's when. What do you think then? Do you still put your money in traditional banks, or is DeFi the way of the future? Please leave a comment below. I'd be interested in knowing what you think. Please remember to hit the notification bell, like and subscribe if you found this video useful so you don't miss any of the newest finance and cryptocurrency material. Stay informed, stay decentralized, and take control of your financial future. Until next time.